हाय गाइस, वेलकम बैक टू अगेन और यूट्यूब चैनल फिनसाइट। और आज हम बात करेंगे हमारे नए सेशन के बारे में विच इज अबाउट हाउ द प्राइवेट इक्विटी फर्म टिपिकली स्ट्रक्चर इन टर्म्स ऑफ लीगल स्ट्रक्चर। ठीक है, तो चलिए आज हम देखते हैं आज के सेशन में किस प्रकार से फर्म का स्ट्रक्चर होता है और कैसे वो वर्क करती है इंटरनली। सो वी विल सी हाउ द प्राइवेट इक्विटी internally works. So let's go to our slides and deck. So basically, as mentioned earlier, that as we mentioned that private equity doesn't exist in a vacuum. They exist within their own fund. They exist as a context. So private equity firms usually raise multiple funds, usually successively higher in value than previous one. So पिछले राउंड में कितना फंडिंग उन्होंने रेज किया और इस राउंड में कितना फंडिंग वो रेज करेंगे, दैट यूजुअली वी सी देयर इज अ ह्यूज डिफरेंस एंड दिस इज हाउ their success gets count. Bigger the fund becomes, bigger the money comes kicks in, bigger the investment return kicks in. All things happen this way. So higher in value than the previous one. If they obtain results, some funds can be specific sector or some have specific investment mandates. तो कुछ funds ऐसा होता है, they are specific to some sectors. Maybe those funds would be only investing in real estate funds, or maybe some fund would be only investing in tech companies, maybe agriculture companies, and there are some funds which usually invest accordingly the way they want. So मोस्टली द प्राइवेट इन्वेस्टमेंट फंड जो होते हैं वो ब्लाइंड पूल फंड्स होते हैं। ठीक है, वी डोंट नो द रिजल्ट्स एंड एनीथिंग, बट वी आर प्लगिंग our money into the business. ठीक है, so as the usual and optimal structure for the private equity firm is a limited partnership structure. Usually the allocators, जिनको हम you know other terms में limited partners भी कहते हैं, who put the money are known as the limited partners, while the private equity partners that coordinate the investments, right? Those people who manage the entire fund, राइट, कि कैसे पूरा फंड को एडमिनिस्टर करना है, दोज पीपल्स आर नोन एज जनरल पार्टनर्स। ठीक है, एंड हम जिस प्रकार से कह सकते हैं हमारे इंडिया में जो पार्टनरशिप स्ट्रक्चर होता है उसमें भी सेम एक्टिव पार्टनर होते हैं और पेसिव पार्टनर्स होते हैं। So limited partners are the passive partners who are providing the funds, the money, but the general partners are those partners who will manage those funds, find the opportunities, invest those monies, monitoring the entire fund, monitoring the accounting, finance functions, and everything, providing the financial statement timely and presenting the limited partners. So these are the activities that those will be done by the general partners into the entire structure of limited partnership. ठीक है, there is some common, so these activities are more or less common. The structure is common with the venture capitalists also, but hedge funds doing the private equity investment usually use the different mechanism and different way to invest. चलिए तो हम चलते हैं दूसरे स्लाइड पे। सेकेंड स्लाइड में हम देखें दे आर ओपन एंडेड एंड द क्लोज एंडेड फंड्स। ठीक है, और फंड्स दो प्रकार के होते हैं, ओपन एंडेड एंड क्लोज एंडेड फंड्स। We will be talking about the close-ended fund because private equity investments are majorly done in the close-ended funds. They are illiquid funds, right? So चलिए इसमें हम बात करेंगे। So limited partners commit without knowing what assets will be, right? So this is called as blind pool. Will have a lockup on their money and capital calls, right? So आज हम पैसा डाल रहे हैं, we are committing a capital like 10 million. One limited partner is committing the amount to the fund, and these will be called upon by the general partners whenever they want, whenever they're required, right? So we don't know in which assets they will invest if this is the fund which is not a specific investment fund, like real estate or tech or something. So in such a case, and they are also not aware of which kind of property even you wanted to invest in a specific property. Maybe you will be buying some IBM funds, or maybe you will be buying some other low tech company, right? So they don't know. This is why it's called a blind pool. चलिए आगे बढ़ते हैं। So PE में जो जनरल पार्टनर्स यूजुअली रिपोर्ट परफॉर्मेंस ऑन द क्वार्टरली बेसिस पे फंड की रिपोर्टिंग आती है और उसमें हम देखते हैं कि हाउ द फंड इज वर्किंग। तो यहीं पे जो जो कर वाला कंसेप्ट हमने बताया था रिटर्न्स का, वो भी हम देखते हैं। दे विल यूजुअली रिपोर्ट नेगेटिव रिटर्न्स इन द फर्स्ट ईयर thereafter break even, and thereafter they goes to the return shoot up, right? Which is a growth phase. And thereafter we with this lockdown, अब आपने देखा होगा hedge funds are usually the open-ended funds, so there is no liquidity problem. So today you buy a shares of the hedge funds, you can easily sell them out, maybe tomorrow, or maybe the day after tomorrow, and you can liquid your funds. But in limited partner, the things are different. They are usually supposed to get their money back at the time of exit. But now it currently recently new things got emerged, that is a secondary market where your general partner might arrange a facility for you where they might replace your investment with some other new upcoming limited partners. But it has its own pros and cons, and still it has some of ambiguities, and it's kind of a more or less depends on the your limited party partnership agreement and the general partners who will be arranging this facility kind of secondary market for you. तो ये था आपका लिक्विड इन्वेस्टमेंट, इलिक्विड इन्वेस्टमेंट्स और किस प्रकार का जो पूल होता है, हाउ द रिपोर्टिंग्स डन लाइक क्वार्टरली बेसिस, रिटर्न शेप व्हिच वी हैव सीन। उसके बाद में हमारा थर्ड जो स्लाइड वो कहता है कि यूजुअली ए पोर्शन ऑफ द फंड इज रिजर्व्ड फॉर द फंड ऑपरेशंस, दैट इज 2%। सो एंड it's what pay team salary, travel expense, consultant, due diligence operations, and most other operational activities further hand for that fund. So usually it's kind of a management fees, which I believe that, or maybe the operational expenses for this you need to plug, or you need to set aside as 1.5% or maybe 2% by those from the fund, that is as a operating cost, because you need some person who do the due diligence for you. You need some person who manage the entire fund, like managers of if you're a real estate fund, then you might need property managers who manage those properties, right? And accountant, financial accountant, CFO, CEOs, and general partners and all who takes the remuneration and all. So those people will be in the fund, and you need to pay them a salary. Those people you need to pay travel expenses and the consultants and due diligence operations, and all the expenses should be met with this call amount 2% of set aside of the entire fund value. That is AUM, right? Assets under management. So 2% of the, let's say, 400 million is 8 million, while 2% of the 4 billion is 80 million, which can radically changes the quality of talent consultant available. So accordingly, how much bigger is your fund, right? That provides the amount of that we are setting aside for the purpose of quality of people we just keep into the private equity funds, which finds the great opportunities for us and invest those money and monitor those funds. Yeah. So thereafter, successful firm raise subsequently bigger funds, securing more and more money for successively higher quality operations. Okay, so this is how the bigger funds operate, and as soon as they become bigger funds, they started to kick in more money, and they started to provide more high quality operations, because you have to understand that when the funds become a bigger, there's some challenges comes in, like transparency, and some of the institutional investor, even in hedge fund industry, the prerequisite is that you need to bring on the transparency, right? It might inflate, the general partners might inflate your profits, using the credit facility available. So this is very important, how the best quality operations you have, how the best quality people you have. चलिए next slide पे. So this talks about the LPs that invest in the private equity fund can be private or retail investors. As I have already told you, there's a family offices, high net worth individual. Apart from, there's institutional investors like insurance companies and um, what I call a endowment, pension funds, and some other funds, and those invest their money usually into the private equity. So so those institutional investors, especially when they comes, they usually demand a much better provisioning, transparency, and more. So it's like in hedge fund industry, they call it institutional quality ops. The basic ones are the management and performance, carry fee. So for this purpose, also there's a two things that we have to keep into mind. One is that management fees, which is required to manage the entire fund, which could range from 1.5% to 2%. Usually, we have seen that after performance fee, that is a carry fee. The carry fee is nothing but the general partners fee. Why we call it a carry fee? Since the general partners are those partners who will get the returns when the funds get exit, but the limited partners are not the people who are also getting the fund at that time of exit, but they are actively engaged. So since they are not charging anything, that's why it is called carried interest, and we also call it carry fee or the performance fee. Okay, which is around like 20% of the returns. So investor allocating high amounts usually demand much lower ones. ठीक है, उसके बाद में है अदर प्रोविजंस जो कि इनर वर्किंग्स में हम वी सी दैट ट्रांसपेरेंसी ऑन द फंड फाइनेंशियल्स लाइक क्रेडिट सब्सक्रिप्शंस, that fund managers or the general partners are not inflating the profits by the credit facility, which looks like you have made double the investment returns, but in actually you are paying the great amount of interest to the interest on the credit facility to your creditors. And this is the reason that's why we need a good transparency and into the fund, so that limited partners who have less time, they can keep a track on. So but it comes with the good amount of money paying to the general partners, which is another thing of we have discussed, like a bigger funds are good at it. Right. After the key person events, distribution waterfalls and clawbacks. So distribution waterfalls, how the amount has to be distributed. The like what I call a returns. That is like after expense out the fund management expenses, and the clawback provision that we can see in the limited partnership agreement, which says like uh, when the money is being returned to the original investors, in such a case, the charges that will be levied or things like that, and the other things like when the general partners are not acting correctly, or, or what I call uh, what I call one more thing like fund extension and restructuring, which is usually about allowed like one or two twice in a 1 or 2 years, that you can extend the fund and do the restructuring into the fund. Thereafter, most MFNs and the bespoken terms, like MFN is nothing like, but we can say like most favored nations. Let's say like there's a country from where the limited partner is coming, is one of the most favored nations. In such a case, let's say where you are charging a 1.5% management fees to the all investor, but you are saying like you have a provision in your limited partnership agreement where you will be charging 1% from to the person who is come from most favored nations. Then in such a case, the management fee percent would be applicable to all the investor would be 1%, right? So this is how the things works into the private equity. This is the inner working of the private equity that we have discussed so far. And I believe, I think we have covered each and every aspect of the fund uh, in terms of inner working of private equity. So we will discuss more into the next session. Thanks for watching the video. Please do like, share, and subscribe. And you can also follow me on the LinkedIn. You can also follow me on the YouTube and subscribe the channel. Thank you, guys.